Probably the most asked real estate question is if one should be renting or buying real estate. It's almost a religious discussion that we have within the community. And I have from a strictly financial advisor point of view, you mentioned economic sense in the question before, and I have a very strong opinion what makes sense in the economic point of view. But we want to know from your point of view, from taxes, what makes more sense, renting or buying?
Only financially looking at it, then investing, right? Because if you invest in real estate, then basically all what you have to pay for it has a influence on your tax rate, right? So, I mean, what are the differences? So, if you buy the home for yourself, for your family, there is no tax benefit, no mortgage deduction. The only tax benefit what you can get is what I said in the other video for maintenance or for craftsmen. You have to pay to repair the roof or for gardening or whatever. These are the only costs which are or will be offset against your tax liabilities, right? There is kind of a small governmental support for families to buy a home, so like Wohnriester or a
KfW-Förderung.
interest support via a KfW, and so on, and probably for climate renovation or modernizing, and so on. If you invest in real estate, right, then basically first all the costs related to the purchase, like agent fee, notary, court costs, and so on, they will go into the depreciation basis for the real estate, and then you rent it out, you receive income from it, and then you can basically deduct the depreciation rate from that, and you can deduct your interest costs for the mortgage, only the interest, not the whole annuity, and any other costs which are related with renting it out, like also agent fee to get somebody,
property manager, yeah,
property manager, real estate tax, or
insurance,
maintenance, and so on. So that is all deductible. And if at some point you sell that property, then it is tax free if you had it for at least 10 years. So after 10 years sale, tax free. So that which might be a huge benefit as well. At least it was for the past years. If you buy now, and as you know, the real estate market is kind of steady now, nobody knows will it go up or will it decrease. So then you have to see, right? But I mean, it's a personal decision. I mean, you have to think about what does it mean. So I would like to live in a house. I rent the house, and you have always the risk that the owner at some point says, "I need it for my own." You have to get out of it, right? So you cannot use it as your own, right? So if you would like to have a nice garden, whatever, the kids are used to it, it's a neighborhood. So that these are all facts you have to consider also. So therefore, buying real estate, it's not just a finance decision.
Yeah,
I mean, you can basically say it's emotion or it's ratio.
Yeah.
Right? But yeah. So the best way, of course, is if you do both.
Yeah.
If you can afford it, of course,
yeah.
right? Which is getting more difficult now with the increased interest rate. Let me have some words on real estate in an international context, right? I mean, we have briefly discussed it in the other video. But if you invest in real estate in another country, then of course you have to look into the double tax treaty where it's taxable. It's usually where the property is located, and then of course according to the respective laws in that country. However, if it's not within the EU, you have to consider it for progression purposes in Germany, which means the income, if it's positive, will influence the German tax rate, and that is a pain. The income determination has to be done according to German law. So, which means with a foreign investment, you have an income determination according, let's say, to UK law and one according to German law, right? So it's a little bit more effort. Rules are similar, right? But like depreciation rate, for example, it might be different, and but from the deduction maintenance and so it's basically the same. And then, of course, you have to look into the treaty, um, if it's really exemption with progression or if it can be taxed in Germany as well, and the foreign tax is credited like we have it with Spain, right? And the same base applies for if you sell that property in the other country, right? It's taxable in the other country, yeah, but then we have to look into the treaty if it has to be included for progression or not.
Right? Okay, which is what we discussed in the other video.
Yeah.
If people have further tax questions, Dirk, how can you help?
I mean, of course, you have to contact me, right? And then basically what I do is I conduct a Zoom meeting for a quarter of an hour to get to know the person, the requirements, and the topic and the expectations. And then tax advice has a lot to do with trust, right? So both parties, so you and I have to say, okay, we can work together, right? It does fit, right? And I have the trust in that person, right? And then based then on the information I get from the interview, then I can basically talk about the process, how it works, and of course also about the fees. What does it cost?